Why is my refund so low? That is one of the real common questions this time around tax year. So in this video, I want to break down some of the common reasons why your tax refund might be lower than the prior year. We're going to look first a little bit at some of those pandemic programs that rolled off. Now that's going to really impact your 2021 versus 2022 return, although sometimes that still rolls over. But then we're going to look at some other reasons why your refund might be quite a bit lower now. Now, my name is Scott Caulfield. I am a CPA and a CFA charter holder and the founder of Sophos Wealth Management. So first, let's just look at some of those pandemic programs that rolled off. So in 2021, people were getting bigger returns on average because you had a lot of these stimulus programs that were paid through tax returns. Now, across the board, I actually would have thought returns would have been down more than they were in 2022. The average tax return was down around 3% for 2022 that were received in 2023, so the tax year of 2022. So that average was 3,167. The prior year, according to the IRS, it was 3,252. But a lot of individuals saw a much bigger reduction in their refunds. So some of those programs that had rolled off, well, first of all, you had the child tax credit. In 2021, that was $3,600 per child. It was there were higher age limits on that, and it was fully refundable. So a lot of people saw that reduce significantly or even go away. That was down to $2,000 per child in 22 and 23 with different age limits as well. Also, dependent care credits. So if you're paying for your kid to go to, let's say, a daycare while you're working, there were more income restrictions and a lower percentage of those expenses were deductible as a credit it came back to you as a credit in 2022 and 2023. So another thing that helped drive those 21 returns higher. Stimulus is a huge one. So for those who didn't get their stimulus checks during the year, they were getting $1,400 per person on their tax return in 2021. So big difference there. You also had earned income tax credit. So in 2021, you could use, there were lower age limits. It wasn't 25, it was all the way down to 19. You could still get that credit as long as you're over that. All these things across the board were a huge hit to some of those refunds in 2022. Now, what about 2022 tax year versus 2023? Surprisingly, there's a huge reduction in the refund so far. So according to the IRS, so far, this is through February 3rd, the average refund is $1,963 in 2024. At this point in time in 2023, we are down 28.9% from there. So that is a big reduction, although I wouldn't read too much into that. Tax law hasn't really changed much for most. So in general, there's not a huge tax law change if your refund is much lower for the tax year of 23 versus 22. So what are some of the other reasons that might be driving a lower refund for you? One of the big things that I see a lot is that W-4, those withholding forms, they've changed versus in years past, and I think it's very confusing for a lot of people. So instead of just saying, hey, I have X number of exemptions and this and that, they try to be more detailed now, but a lot of people just kind of miss things when they fill this out. For instance, if you have a spouse, there's a box you're supposed to check to kind of indicate how much income that your job should take into consideration for them. A lot of people just miss that box. As a result, your job thinks that you are the only income for the family. They withhold at an inappropriately low rate. And come tax time, you come to find out you withheld or your employer withheld way too little in taxes relative to your income. And it's a nasty surprise because you get a big balance out. I've heard a lot of stories of this one happening. Another one that happens, a lot of people who in the past have been just W-2 employees will either switch to being self-employed or just pick up some side contracting work. They'll get a 1099 NEC, and surprise, no taxes are withheld. And not only are no federal income taxes withheld, but none of the self-employment taxes are withheld. So we're talking about 15.3% that you have to pay on that income. So if you make, let's say, just $10,000 extra on a side gig, you're going to have a $1,500 tax just in social or in that self-employment tax, which kind of covers you and your employer's portion of Social Security and Medicare. That is a nasty surprise for people, and that can definitely give much lower refunds and big balances owed. There's other kind of more traditional surprises if your capital gains are higher than they've been in years past. If you've kind of switched to be newly retired and your withholdings on things like Social Security or pensions is not high enough, that can ding some people for a surprisingly large balance owed or a much lower refund. So those are the most common situations. Of course, it's really going to depend. I mean, there's a lot of different things that can drive a reduction in your particular refund. But anyways, thanks for tuning into this. Appreciate it if you like this video, subscribe to my channel, and check out my website to get more information. Appreciate it.